Cameron McIntyre, welcome to the business.
No, fantastic. It's great to be here again.
As we know, rates have gone up aggressively in the last half. What has that done to demand or buyer behaviour for both new and used cars? I mean, is the demand still there?
Yeah, no, I mean, the demand is still there. The way we measure demand is on the basis of, what sort of traffic are we seeing coming to our websites, and that's up. What sort of inquiry volumes are we seeing on those cars that are being advertised on our sites, and that's up. How fast is it taking for someone to sell a vehicle on the site, and that's faster than what it was in the pre-pandemic environment. So all those core drivers are still strong. So what we are seeing though is we're seeing supply conditions return to more normal levels. So new car supply is gradually resolving itself. There are still challenges with some makes and models, and used car supply is improving as well. So I mean, if you look at the car sales site today, we have about 195,000 cars for sale, and in the midst of the pandemic it got down to as low as 120. So it's gradually getting back to normal, but it's just taking its time.
I want to ask you about supply in just a moment, but just keeping with demand, and based on your demand metrics that you mentioned there, at what point do you expect maybe demand to soften? Because we know, we've heard from the RBA, we are being told to expect more rate rises to come, and that the 9 rate rises that we've already do have a lagged effect.
Yeah, no, look, I mean, in the auto industry, I mean, over the past sort of 16, 17 years, what I've observed is that, I mean, people buy and sell cars for many different reasons. So, change in family size, change in job, change in location, car gets to 100,000 kilometres, whatever the targets are for individual owners, that will determine when people change. Interest rates do have some impact on the way people think about buying and selling cars, but on a $30,000 used car, 300% or 300 basis point increase in interest rates, it doesn't have an enormous cash flow impact on people. I think what it comes down to is debt serviceability. So, over time, if interest rates keep going up, what does that do to someone's debt serviceability? So, if people find it hard to get credit, then that's where you'll see demand for cars changing. But maybe what happens is people just substitute. So they substitute new for used, or they'll go from buying a $40,000 car to a $30,000 car. I guess only time will tell. But at the moment, we're not seeing any significant impact as a result of the interest rate changes that we've observed so far.
Okay, you spoke about supply normalising somewhat just earlier. We saw this boom in second-hand car sales during the pandemic, but do you think that has now settled? Is demand matching supply?
Yeah, I think it's matching it better. So I mentioned before, it's still faster to sell a used car now than what it was pre-pandemic, but that gap is reducing. So it's getting closer to where it was pre-pandemic. But in terms of pricing, we've seen used car prices from pre-pandemic to today up by about 40%. So, and we're not seeing those prices come down. They probably plateaued around September last year, but they're still at that sort of change pre-pandemic to today. So, and I don't really see pricing coming down all that significantly, unless there is that liquidity issue that we mentioned, or serviceability issue that we mentioned just a minute ago.
So it'll still be a seller's market for some time to come?
I think it's still a seller's market at the moment, yes. For how long, I don't know, but that's still the case today.
Cameron McIntyre, great to speak with you. Thank you.
Thank you.